Preparing for a hedge fund accounting and investor relations at Citco Fund Services interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Walk me through the NAV process for a hedge fund administered by Citco. The interviewer wants to assess whether you understand Citco's core fund administration deliverable, producing accurate, timely NAVs by connecting trade data, valuations, reconciliations, accruals, fee calculations, allocations, and review controls. While answering, focus on the full life cycle: trade capture, reconciliations, pricing, accruals, fee calculations, investor allocations, review checks, and controlled release to the client and investors. A hedge fund NAV is the fund's economic value per share or unit at valuation date. I start with trade capture and position reconciliation, then price investments, accrue expenses, book financing costs and income, calculate management and performance fees, and allocate P&L to investors. After cash, broker, and custodian breaks are cleared, the NAV package is reviewed, approved, and released to the manager and investors, according to the fund's calendar. Question 2. How would you perform cash and position reconciliations against prime broker records? This question evaluates your practical understanding of daily controls in fund administration, especially how cash and position reconciliations support NAV accuracy, break resolution, and confidence in records received from brokers and custodians. Make sure to cover the data sources, matching process, common break causes, documentation, escalation, and why unresolved differences can affect valuation, investor allocations, and the final NAV release timeline. I treat reconciliations as evidence that the books match independent records. For positions, I compare accounting records to prime broker or custodian statements by security, quantity, and settlement status. For cash, I match bank or broker balances, subscriptions, redemptions, fees, financing, and open wires. A break is investigated by checking trade files, corporate actions, FX rates, or timing differences. Unresolved material breaks are escalated before NAV sign-off. Question 3. How do you approach pricing listed, hard-to-price, and illiquid hedge fund positions? The interviewer is testing your understanding of valuation hierarchy, pricing governance, and how an administrator supports fair value without casually accepting unsupported manager marks or creating unapproved NAV adjustments. In your answer, talk about listed prices, vendor feeds, broker quotes, illiquid assets, valuation policy, exception handling, approval evidence, and the need to document judgment before NAV finalization. Pricing is about using the most reliable, observable evidence available. Listed equities are straightforward: exchange close or approved vendor price. For bonds, swaps, or bank debt, I would compare broker quotes, vendor prices, and valuation policy hierarchy. Illiquid Level 3 assets need manager-approved fair value support, committee evidence, and documentation. I would not silently overwrite prices. I would document exceptions, obtain approval, and assess the NAV impact before release. Question 4. Explain how management fees and performance fees are calculated in a hedge fund. The interviewer wants to assess whether you can calculate and explain incentive economics, including high watermarks, hurdles, crystallization, and how fee mechanics flow into investor-level capital accounts. While answering, focus on the formula, timing, investor-specific application, impact of losses, and controls needed to ensure fees agree with the offering documents and allocation methodology. Performance fees reward the manager only after investors receive the agreed economics. Suppose an investor has a $1,000 opening capital balance and the fund gains 10%. With a 20% incentive fee and no hurdle, the fee is $20, leaving $80 net profit. If there is a high watermark, no incentive fee is charged until prior losses are recovered. I would also check crystallization frequency, series accounting, equalization, and investor-specific terms. Question 5. What checks would you perform before processing subscriptions and redemptions? This question evaluates your understanding of investor services operations, dealing deadlines, cash confirmation, register updates, and how subscriptions and redemptions affect ownership, liquidity, and NAV allocations. Be sure to mention accepted documentation, AML clearance, cutoff dates, share class terms, redemption gates or fees, cash settlement, and reconciliation between the register and accounting records. Investor activity affects both cash and ownership, so I treat it as NAV sensitive. For a subscription, I confirm the dealing date, accepted amount, cleared cash, AML approval, share class, and subscription price. For a redemption, I check notice period, gates, holdbacks, fees, and available liquidity. Once processed, the investor register, capital accounts, cash reconciliation, and NAV allocation must all agree. Clean cutoff control prevents one investor subsidizing another. Question 6. Why are AML and KYC controls so important in investor relations for hedge funds? The interviewer wants to assess your awareness of regulatory risk in investor relations, including onboarding controls, sanction screening, beneficial ownership, escalation discipline, and protecting Citco and client funds. Make sure to cover documents collected, risk-based review, source of funds, politically exposed persons, sanctions checks, when to escalate, and why capital should not be accepted prematurely. AML KYC is a first-line protection for the fund, administrator, and financial system. In investor relations, I would collect formation documents, beneficial ownership, authorized signers, tax forms, source of funds support, and sanction screening evidence before accepting capital. If documents are missing or risk flags appear, I would not process blindly. I would escalate to compliance, track outstanding items, and communicate professionally so the investor experience stays controlled and clear. Question 7. How do side pockets, gates, and lockups affect hedge fund accounting and investor servicing? This question evaluates your ability to connect fund legal terms with accounting operations, especially how liquidity restrictions and illiquid investments affect investor allocations, redemption processing, and disclosure. In your answer, talk about why side pockets exist, which investors participate, how gates limit withdrawals, and the need to follow offering documents rather than informal preferences. Side pockets isolate assets that should not be valued or liquidated, like the main portfolio. If a distressed private credit position is side-pocketed, only investors in the fund at that time usually participate in its future gains or losses. Gates limit redemptions to protect remaining investors from forced selling. Operationally, I would confirm governing documents, investor eligibility, separate allocations, disclosures, and redemption calculations, so liquidity terms are applied consistently. Question 8. How is fund-level P&L allocated to individual hedge fund investors? The interviewer is testing your understanding of partnership accounting and whether you can translate fund-level performance into fair, rule-based investor capital movements across classes, series, and dealing dates. While answering, focus on beginning capital, investor activity, realized and unrealized P&L, expenses, fee allocations, equalization or series accounting, and tying the roll forward to NAV. P&L allocation is where fund-level results become investor-level capital movements. I would allocate investment income, realized and unrealized gains, expenses, and fees, according to the partnership agreement and share class economics. If investors enter mid-period, series or equalization methods prevent them from sharing pre-admission performance. I would check beginning capital, activity, allocated P&L, incentive fee, and ending capital roll forward. That roll forward should support statements and NAV. Question 9. A prime broker cash break remains unresolved the day before NAV release. What would you do? This scenario tests how you prioritize under deadline pressure, investigate breaks logically, judge materiality, document conclusions, and escalate issues before a NAV is approved or released. Be sure to mention classification, aging, likely sources, timing versus true breaks, materiality thresholds, evidence retained, communication with brokers or clients, and whether NAV release should pause. I would first classify the break, amount, currency, age, and whether it affects NAV. Then I would trace expected cash movements to trade settlements, financing interest, dividends, corporate actions, FX conversions, wires, and bank fees. If it is a timing item, I document support and expected clearance. If it is unexplained or material, I escalate to the senior accountant, client, or broker, and hold release if policy requires. Question 10. How do corporate actions impact hedge fund accounting and NAV production? The interviewer wants to assess your product awareness beyond simple buys and sells, including how corporate actions affect positions, income accruals, tax withholding, cost, and reconciliations. Make sure to cover different event types, key dates, accounting entries, broker confirmation, tax treatment, and why missed actions create both NAV errors and reconciliation breaks. Corporate actions can change positions, cost, income, and tax, so they cannot be treated as clerical updates. For a stock split, quantities and prices change, but market value should remain broadly unchanged. For dividends, I check ex-date, record date, payable date, withholding tax, and accrual treatment. For mergers or tender offers, I verify elections and consideration received. A missed corporate action creates position breaks and can materially distort NAV. Question 11. What information should appear on an investor capital statement? This question evaluates your investor relations readiness, especially whether you understand the statement package investors expect and how it ties to the fund's books and investor register. In your answer, talk about opening balance, activity, P&L allocation, fees, closing capital, ownership or shares, class details, review controls, and clear presentation for investors. An investor statement should reconcile the investor's capital from opening to closing balance. I expect beginning capital, subscriptions, redemptions, transfers, allocated profit or loss, management fees, incentive allocation or fee, ending capital, ownership percentage, and sometimes share or series details. Before release, I would tie totals to the investor register and fund NAV. Presentation matters because investors rely on these statements for performance, audit, and tax reporting. Question 12. If you discover a NAV error after statements have been released, how would you handle it? The interviewer is testing maturity and control mindset, how you respond to errors, quantify impact, follow escalation protocols, protect clients, and avoid informal fixes under pressure. While answering, focus on root cause analysis, materiality, affected periods and investors, fee impact, documentation, approvals, possible restatement or compensation, and transparent communication with clients. I would avoid defensiveness and move into impact assessment. First, identify the root cause, affected period, affected investors, and whether the error is above the fund's materiality threshold. Then, quantify the NAV, fee, and allocation impact. Preserve evidence and escalate through Citco's review process and the client. Depending on policy, the fund may restate, compensate investors, or disclose the error. The key is control, documentation, and timely communication. Question 13. What accounting issues arise with derivatives, such as swaps and options, in a hedge fund NAV? This question evaluates whether you can handle hedge fund instruments that create valuation and reconciliation complexity, particularly swaps, options, financing, resets, expiries, and broker statement dependencies. Make sure to cover fair value, realized versus unrealized P&L, cash settlements, notional exposure, premiums, expirations, collateral or margin, and reconciling terms to independent broker data. For derivatives, the accounting challenge is not only valuation, it is complete capture of economics. With an equity swap, I would book fair value changes, financing, dividends, resets, and cash settlements based on broker statements and trade terms. For options, I focus on market value, premiums, expiries, and exercised or assigned positions. I would reconcile notional, quantity, price, and unrealized P&L because small setup errors can create large NAV swings. Question 14. An investor challenges a number on their statement. How would you respond? The interviewer wants to assess your client service judgment, including how you handle sensitive investor questions, investigate discrepancies, communicate clearly, and preserve confidentiality during busy periods. Be sure to mention prompt acknowledgement, clarifying the query, tracing to source reports, involving the right reviewer, correcting errors formally, and explaining valid numbers simply. Service quality is speed plus accuracy. If a manager or investor challenges a statement, I would acknowledge quickly, clarify the exact issue, and trace the number to the NAV work papers, investor register, allocation report, or fee calculation. If we made an error, I would escalate and correct through the approved process. If the number is right, I would explain it clearly with support, avoiding jargon and protecting confidentiality. Question 15. Why do you want to work at Citco Fund Services in hedge fund accounting or investor relations? This question evaluates motivation and fit for Citco's fund administration environment, where candidates need technical curiosity, accuracy, resilience, teamwork, and a client service mindset under deadlines. While answering, focus on Citco's scale, hedge fund exposure, operational discipline, technology-enabled administration, learning curve, and the strengths you bring to NAV or investor services work. Citco is attractive because hedge fund administration sits at the intersection of accounting, markets, technology, and client service. I want a role where accuracy matters daily and where I can work across NAV production, investor services, reconciliations, and reporting. Citco's scale means exposure to complex strategies, tight deadlines, and institutional controls. I would bring strong attention to detail, comfort with numbers, and a service mindset under pressure. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.